Okay, so now we are just left with one small topic of cash budget, and let's finish off cash budget. As compared to the other chapters that we guys have in FM, the chapter of cash budget, I would say, is not that important vis-a-vis all the other chapters. Seldom you will find sums from cash budget in the exam. So for a revision purpose, you take it at the end if time permits. But I would definitely explain you what exactly is cash budget, and we have one sum that needs to be tackled up on cash budget. So that's what is the point of discussion, that is cash budget. Now, first of all, what do you understand by the word budget? Budget means what? Budget is actually nothing but estimation or a forecast. Budget is estimation or forecast. Now, to the word budget, if you add the word cash, then what will happen? What exactly are we supposed to do? Here we are supposed to estimate what? This is estimation of cash bank balances. So we are going to just estimate how much cash bank balance we need in our business. Now, why do we need this chapter? What is the objective? This you will be understanding in one of the concept that we are going to discuss at final CA as well, in the chapter of interest rate risk management, that point, but I will just give you a small explanation as well. So suppose, see, in our business, do you agree we need cash? Keeping cash more than what is required is harmful for the business, because ideal cash will not generate any revenue on its own. Keeping less than what is required is also harmful, because if you keep less than what is required, it might happen that you might not be able to meet your contingencies and operations would have to be halted. And the moment operations are to be halted, business operations, it will cost the organization. So how much money should we keep in our business? How will I come to know that? You need to just estimate. And how will you estimate, friends? You will estimate your requirement of cash by preparing something called as cash budget. And this cash budget, friends, is actually nothing but preparing a cash bank account only. The cash bank account which we have learned in accountancy is now just going to be prepared here. The only difference between the two is the timing difference. In accountancy, the entire cash bank which we prepared was the one where transactions already have occurred and we were recording the transactions. Here we are forecasting, we are estimating that this transaction will occur, this transaction will occur, and so on. So we just make a forecast, and then on that basis we determine how much cash bank balance will be required. So how is this forecast done? One way to estimate your requirement is simply to prepare cash budget. There is one more way for estimating your requirement, and that is by following a model by William J. Baumol. So we have William J. Baumol model. That is one way to estimate the cash bank balance requirement. The other way is simply prepare your cash bank account for a future period. I'll give you a pro forma for the cash bank account. Usually the estimation that we have to do, friends, is always done on monthly basis. So now suppose, let's presume that we are almost nearing completion of Feb. So let's take it this way. I am interested in knowing how much cash bank balance my firm will have for the month of March, April and May. Let's presume that we are in the month of March, beginning of March, I would say. So I am the finance manager and I am interested in knowing how much cash bank balance my company is going to have. For which 3 months? Tell me. March, April and May. So how will I come to know that? Simply I'll have to prepare the cash budget. So I'll prepare a cash budget for a period of 3 months, and I would say 31st of May 2019. So we have particulars. So this will be for the month of March, April and May. Okay, so as I told you, this is actually nothing but cash bank account only, friends. Just remember it, cash bank account. So when we say it is a cash bank account, can I say only those transactions which affect cash bank will appear here. It means non-cash transactions will simply be ignored. So this chapter will not take into consideration non-cash transactions such as depreciation, loss on sale of fixed assets, preliminary expenses written off. That is out of the purview of this chapter. So I'll give you the pro forma here. Since it is a cash bank account, it will have opening balance. Now can I say opening of March will be closing of Feb? Can I say that is going to be actual? Yes, because we are in first week of March, we are presuming we are in first week of March, तो Feb का तो closing actual पता ही होगा ना, तो वो हो जाएगा opening balance. To this you will add the receipts. I would use the word receipts here. You can even use the word inflows as well. Tell me, ये जो यहाँ पे inflows होंगे, वो actuals होंगे या budgeted? So that's going to be definitely what? They're going to be budgeted receipts. So you take into consideration the budgeted receipts. That is going to give you total of A, which would be in the form of cash sales, collections from debtors, sale of fixed assets, sale of investment, issue of debentures, issue of shares. तो वो सब जो receipts होगा budgeted ones will be added there. Then we will subtract the payments, again these budgeted ones, and when you subtract the payments, then A minus B, what I'll do is I'll get the closing balance. Now what are the different ways, what are the outflows, what are the different form of outflows? Cash purchases, payment to creditors, payment of wages, payment of admin expense, selling expenses, interest payment. Every outflow will appear here, but all are budgeted ones. Then you take the total of A, subtract B from it, what you get is closing of March. This closing of March will become opening of April. Again add the receipts less the payments. Friends, understand friends, if you can interpret the question well, job is done. You have to just prepare a cash bank account, that's it, and find monthly balances of cash. This is one way to do the estimation of cash bank balance, by preparing a monthly cash bank account. I'm again telling you, don't unnecessarily devote a lot of time to this chapter. There are other chapters which can be devoted time there. You can get marks great, faster there, and this chapter rarely comes in the exam, so you can take a gamble here if you want to, but nonetheless just do it once, that will be more than sufficient. But in exam time, at the end, when time is not sufficient for revision, if at all, then you can take up this chapter at the end. So this is one, we can say, preparing the cash budget and estimating the cash bank balance requirement. There is one more way for estimating the cash bank balance, and that is by following William J. Baumol model. Now I would say that you please do refer this part of the sum in the exam. Just a second please. So there is one more way for estimating the working capital requirement, and that is by going for William J. Baumol model. And I would suggest that at least this much you can refer during your exam time, and this also manageable because it is actually nothing but using that EOQ formula which you people have learned in your costing syllabus, economic order quantity. Okay, so let's understand now this with the help of an example. See, you people have learned that formula. EOQ का formula क्या था? Root of 2ACA by CI. So we have ordering cost, we have carrying cost and all that stuff, right? Same formula is to be applied here. So here, instead of using the stock requirement annual, we'll go for annual cash requirement. T will be the transaction cost per order. O is the opportunity cost that we are going to lose out, that is the interest lost in per annum basis. I'll explain you what exactly is this. We don't have to know the derivation, you people have already learned it. So this becomes your optimum cash balance, I would say. optimum cash balance as per William J. Baumol model. Let's assume it this way. Suppose my annual requirement of cash is rupees 12 lakh, and the transaction cost, I would say, per order is, say, rupees 50, and the opportunity, that is the interest rate, is, say, 8% per annum. My question is very simple. If you think that you will require in the entire year 12 lakh rupees, let's presume you require 12 lakh rupees to meet your expenses for the business, how can you arrange this 12 lakh? One option available with you will always be go to the bank and you can borrow money. Or it may be possible that you may have your own investments. You can dilute your investments and then you can make use of that in your business. Now suppose you dilute all your investment of rupees 12 lakh right away. Requirement पूरे साल का है friends. पूरे साल में आज ही थोड़ी 12 लाख का जरूरत है मुझे. Throughout the year I will require 12 lakh rupees. So one option is I would have simply sold off all my investments, and if I would sell it, I have the cash bank balance, then I can meet my requirement for the entire year. But if I do that, what is the biggest blunder problem that I'm doing? Can I say if I convert that investments into cash, I will be losing out 8% for the entire year. Now to sell your investments, you will have to place a sell order, and when you sell your investment, at the time of selling you have to pay brokerage of rupees 50 per order. अच्छा, अभी आप मुझे बताइए यहाँ पे आप ये 12 लाख रुपीस डाइल्यूट कितनी बार करोगे? सिर्फ एक ही बार. तो ऑर्डरिंग कॉस्ट जो होगा आपका, जो ट्रांजैक्शन कॉस्ट होगा, कैन आई से यू विल हैव टू इनकर इट ओनली वंस, बट यू विल बी लूजिंग अपॉर्चुनिटी ऑन 12 lakh rupees. So you plan to reduce this cost. You decided नहीं यार इतना ज्यादा क्यों, पागल हो गया क्या? तो आप ऐसे सोचते हो क्यों ना मैं 6 लाख के 2 बार इन्वेस्टमेंट बेच दूं, तो ये 6 लाख से पहला 6 महीना यूज कर पाऊंगा, बाकी का 6 लाख का दूसरा 6 months यूज कर पाऊंगा. So in that case you will not lose opportunity on 12 lakh, but you will be losing opportunity on 6 lakh rupees. Because what will happen, you will dilute your investment of 6 lakh, तो 6 lakh hard cash हो गया अभी आपके पास, वो 6 lakh पे you are losing opportunity. But can I say now you will have to place order 2 times, so it will bring you a cost of rupees 100. Now that becomes 2 times. So you say यार नहीं यार और भी opportunity कम करवाना है, तो then instead of you selling shares twice or investment twice, you can sell it 4 times in a year. So you dilute your investment of rupees 3 lakh every quarter, then you will be losing out opportunity on 3 lakh at a time. But you will have to convert your investment into cash 4 times, so you will have to incur 4 times the ordering cost. If I want to reduce it further, तो ये तो चलते ही रहेगा. But what is happening, the more you try to reduce your opportunity cost, what is happening? The more you try to reduce your opportunity that you're losing, your ordering cost is increasing. So if you want to reduce ordering cost, your opportunity cost will increase. So what is happening now here is both are cost to the organization. Both are cost to the organization and both are important but are conflicting each other. You try to reduce one, the other is increasing. You try to reduce the other, the first one starts increasing. So both are cost to the organization, obviously important cost to the organization, but both are conflicting in nature. So my objective should always be what? To minimize my total cost. So how much worth of investment I should dilute at a time such that my overall cost is the least. Are you getting what I'm telling you? So ये जो 12 lakh का मेरा investments है मेरे पास, उसको मैं कितना dilute करूं at a time such that my ordering cost plus opportunity cost, when I sum it up, it is the least. there comes the help of this William J. Baumol model. You just have to apply that formula of William J. Baumol model. It will give you how much amount of investment needs to be sold at a time, which will minimize your total cost. So I would say this way, in my example, 2 into annual requirement of cash is 12 lakh. What is the ordering cost that I kept? 50 rupees. What is the opportunity cost? This is the opportunity cost, that is nothing but the interest loss on per annum basis. That's going to be 0.08. Now when I solve it, I can come to a conclusion this way. So it is 2 into 12 lakh into 50 divided by 0.08, और इसका अब हमको रूट लेना है. So that is coming to 38,730 rupees. So it implies, friends, you sell investments at a time of 38,730 rupees at a time बेचने का. इससे आपका ordering cost and opportunity loss will be the least. This 38,730 will help you to survive how many days? You require 12 lakh for entire 365 days. If you sell 38,730 ka, you can survive for approximate 12 days. So every 12 days, what you should do, sell this much of investment. You can meet your requirement of 12 days, and that will help you to have the least of opportunity cost and the least of ordering cost, such that your total cost is the least. So this is your optimum cash balance, that at any point of time in your business you should keep this much. Dilute your investment worth rupees 38,730. It will help you to have the least cost. Did you get this? So we have one sum that's based on the William J. Baumol model. That will be the point of discussion. So let's finish it off that one, friends. Okay, so what's the required part of sum? A firm maintains a separate account for cash disbursements. The total disbursements are 1,05,000 per month or 12,60,000 per year. Administrative and transaction cost of transferring cash to disbursement account is rupees 20 per transfer. Marketable securities yield 8% per annum. Determine the optimum cash balance as per William J. Baumol model. So as per William J. optimum cash balance is given by this formula. So I would say this will be 2 into 12,60,000 into, I would say, what is the ordering cost? The transaction cost per transfer is 20 by 0.08 again here. So when I solve it, I'll come to know the optimum cash bank balance. That would be the solution. Manageable it is, but if you don't know what is William J. Baumol model, then you will not be able to solve it only. So that's coming to around 25,100 rupees. So at a time we should dilute our investment, or we should transfer 25,100 from my investment account to my cash bank balance account of 25,000. This will ensure that my total cost is the least. This is what is the only point that I would suggest you can refer during your exam time. Rest, if you want, you can revise once, no doubt about that. एक बार तो पूरा syllabus cover करना ही है आपको. Cash budget को आप ज़्यादा importance नहीं दोगे तो चलेगा. And with this, I have covered up all the possible things for your revision purpose in a very short span of time. So my suggestion would be, again, please do maintain the revision hierarchy this way: ratios, leverages. So before you pick up any other chapter, I would suggest please refer ratios, leverages, capital structure, cost of capital, capital budgeting, risk analysis and capital budgeting, leasing, then dividend policy, and then I would say you can go for estimation of working capital, receivables management, cash budget. So this was all your entire syllabus of FM. All the very best for your exams. Do well, come out with flying colors. We are eagerly waiting for you guys at final CA level. So all the very best. Do well and do take care of your health. That is also something which is very much important, where people, neglect that aspect. So do take care of your health, and God bless you. All the best. Thank you.